going live. Going live. So the connection is excellent. Let's see what's gonna do. Hello and welcome everyone for the Forex Gym. This is a daily Forex analysis for 10th of April. We're gonna be going in through with the 4 currency pairs as always. And then if you got any questions, you can just pop it in the chat. So if you're new to this channel, I'm doing this daily Forex analysis from Monday to Friday at 8 AM UK time. So I made some tweaks on the OBS, so I'm just gonna check if it's performing properly or not. So just bear with me a few seconds. And should be the screen should be clearer than it was before. But we might encounter some delays, so that's why I'm worried about. I made some changes on there. I think it's fine. Let me just see on the phone. Yeah, it's kind of a bit delayed. Pretty delayed actually. It's kind of a bit delayed, but I think the quality of the recording is better. So I think it's better quality and coming a bit delayed, and I will check it out later if it's again. Let's start with we're gonna start with the analyzing the 4 currency pairs. The one I already put it on the title, and also it's on the chat box. So we got this 4 currency. I'm gonna start with the euro against the US dollar, followed by US dollar against Swiss franc, and euro against Australian dollar, and lastly we're gonna have US dollar against Japanese yen. Also, if you have any questions or there's any particular currency you want me to have a look at it, just pop it in the chat, and then after I'm done with these all 4 currencies, I will have a look at and I will analyze. Or if you have any other related trading related questions, just again pop it in the chat. I hope you're doing very well, and we're gonna start with the euro against US dollar. Let's start jumping to the MetaTrader 4. So we got this Euro USD. This is a 4-hourly time frame. If you follow my daily Forex analysis, I did analyze this yesterday, and we had this nice move yesterday after the news were out, and we had this lovely move. It has broken this trend line, which I was talking about, this lower trend line. But the one thing I missed, that we had this trend line as well. I did not draw that trend line, but now we've seen that it's the price already has broken that trend line as well, which is pretty good. So we get that one out of the way, and now we can concentrate to for the targets, well, the entries first and the target after that. So it did the move what I was looking for. Yes, was it yesterday? So it was actually today already, but I have missed out. Actually, I was sleeping, so it was quite late, and I was already sleeping, so I did miss out on that trade. So if you watched my analysis there, you should have gone into this trade if you were lucky enough. And the price moved since, I think it was the entry was down to these lows, if I'm not mistaken. It was around 09 was 0920, but down down to these one of these lows. So that was, and it's also set it up as well. We now look down to the 15-minute charts. It did set up, so yeah, end up missing, but that's what happens. You can't get every single trade. I mean, no one can get every single trade. It could be many different reasons. You might be just late at night or early in the morning while you are asleep, or it could be doing something else and you just miss out on the trade. So that happens. There's nothing you can do. We just concentrate for the next trade. There's gonna be plenty more trades in the future. So that's what we're gonna do now. We're gonna wait for the next opportunity to get into the next trade, really. So for now, what we have. So we can see the price is already edging higher. We had the news out yesterday, and now it had this nice rally up, and now it's been stalled a bit for the last few hours. But now we can see that the price is already trying to go higher. So for now, I want to see a little bit more on this, a little bit more strength on the upside, and then a nice close, nice bullish close. I'm already happy with this candle. It's pretty decent 1 hourly candle here. So I do want to see for the next, for this hour and then next hour possibly, depending what it's gonna do on this hour. If it closes nicely up, I do want to see the price taking out this spike here. Actually, I did forget to bring up the pen. Let me just bring up the pen if I find it in here. Where is that pen? Oh, Epic pen, that's the one. Let me bring up a pen because I will be able to draw it on the screen, so that will be easier for you guys to get the idea what I'm talking about. It might take some time to load this pen. Yeah, the picture coming up a bit delayed. Okay, so we got the pen up, which is good. So I want to see the price to take out this spike high here on the hourly time frame. So if it comes up, and I want to see a strong close, similar to this candle, really, something like that. And then I would be looking for a retracement down. On this particular case, if let's say the price comes up here and closes. So it needs to come up about another 10 to 15 pips and close around that area. So let's call it for 109.60 or 109.65 zone, and then I will be looking for the retracement. So if we take it 109.60 would be retracement. Down at these lows, which is about 109.450, so right about at the same level where the price is at the moment. But I do want to see a bit more strength on this one and a good bullish close. Then I would be, if the price gives that opportunity to retrace, then I will be looking to go long. So for the stop losses, we would be looking, let's call it a 109.50. With a stop loss, would be looking about 25. So in this case, you either take 20 pips or you take 30. Let's call it 30. 20 or 35. So if you take 20 pips, then the chances of getting stopped out is of course higher, because then you have a tighter stop. But what you can do, because the price does like to mess around and maybe wants to come down, and we have this spike low down here, so the price does like mess around, and then if the price might come down and just take out this spike low and then just continue to towards the long side. So you need to keep that in mind, but I'm willing. Let's have a look at the target first. So if we can allow ourselves to have a 35 pip stop, then it's fine, as long as the risk reward is maintained. So for this one, so this horizontal line is the next big resistance. As we can see, this is a daily time frame. We see that there's so much price action going on here, so that should act as a very good resistance. But before that, we still have some resistance. Like we have these highs here on this 110.25 zone. We have these highs here. We got this high and this high, so we got quite a bit of price action. And it's very close to this weekly R1, so they might act also as a resistance, but the big resistance is a bit further up where this horizontal line is. So price might come up, and after testing this, it might have a retracement, which will be another opportunity to get onto the long side. You can add the units. That's why you make it. When you start adding the units, then you will have much greater risk reward. I'm gonna cover that in my other videos, not on a live stream, but I do make the videos on how to improve your trading, anything go with this, with the psychological or technical. I do generally on Sunday. I upload on Sundays or sometimes Saturdays. It depends, but it's only on the weekends. Generally happens after the weekly Forex analysis. So I'm going to include that one. I think it's also very important, adding the adding on your trades, because once you have let's see what we said we're going to get on. So if you get on to for the period of example, so if we get on to this, so let's say this one. So we got to here, so we put the first unit in here, for example, when you use the stop loss down here, and then price made its way up to these highs, and then the price is retracing. So what we can do in here, let's say if when our original stop loss is down to this area, we can move the stop loss to maybe even either break even or even higher, where the profit zone. And then once the price retraces to in a desired retracement area, when we are planning to get into the long side, so in other words, to add another unit. So let's say the price retrace and we're getting on to this area here. So the first trade you took down here, it's not a risk anymore, because we already moved the stops up, either break even or in the profit area. So once you take that trade, the risk gonna be the same. So if you use, let's say, 30 pips stop loss on the first unit, and then you move the stop to the break even, there is no risk on that one. And if you add the unit on in here, and you use another 30 pip stop loss, then your risk is the same, it stays the same risk. So you're not necessarily taking another risk. So because you already moved the stop on the first unit, and then you are just taking another trade which is same direction, but it's just adding that unit. Of course, there is a risk if the price continues to fall, then you're gonna lose, but the risk is gonna be the same. Let's say if you're using 1%, it's gonna stay as 1%. But if it turns around and goes to your desired direction, then you have already 2 units, and then your reward is much bigger than your initial risk. So that's how you make to like 1 to 20 risk reward or even more. Generally, that happens on a swing trades. Again, it does not necessarily happen. It doesn't happen on a scalp trading. Sometimes on a day trading, depends. But mainly it happens on a swing trading basis, because the scope is generally much bigger. So let's say if you're taking the swing trade, you're generally looking maybe 2 or 3 or 400 pips or even higher. That's why. So let's get rid of these. We said, let's go to, so we were talking about the target. I nearly forgot. So the first target, I would say I will be targeting this one at 110. So this one is a bit higher. So let's call it 110.20, and we said to get on. If the price 110.20, we're gonna get 109.50. So that gives us 120, so it gives us a 70 pips, so 35 pips. Still gives you 1 to 2 risk rewards, but I will not be happy on 1 to 2 risk reward personally, because I like to use 1 to 3 risk rewards. So for me, that will be a 20 pip stop. But if you're happy with the 1 to 2 risk rewards, then you can use the 35 pip stop loss. 1 to 2 again is still pretty good. It's just my strategy, and everything is the way it's designed. I use 1 to 3 risk rewards, but again, anything 1 to 2 is pretty good, and if it's even higher, then it's even better. So we're gonna wait for the price to come up at about 109.60 zone, and if it closes nicely, shows more strength to the towards the long side, then we'll be looking for the price to retrace down to this 109.50 zone, which where the price is currently at the moment. And then the target's gonna be this 4-hourly highs up here at 110.20 zone. The other thing you can do, you can take the half unit off. You can close the half position and bank the half position. So if you have I don't know, let's say £10 per pip, then you can take 5 off, and then you can leave the remaining 5, run it to up to this horizontal line, which is at 110.80 area. This is the strong resistance because we have so much price action going on. This is on a daily time frame, so we got a lot of price action going on. So I think the price will have a reaction on that. So that will be it for the euro dollar, and then now we can move to which one was the other currency? US dollar against Swiss franc. Let's move to the US dollar against Swiss franc. We go here. Okay, this got so close. So USD against Swiss franc. This starting from the daily time frames. It's making its way down pretty well. When the price came down here, so the price tested these lows, and it has a very mild reaction, and then we can see now the price is coming down. Maybe it wants to take out this spike low down here. It's probably going to be a lot of orders, stop orders or limit orders down here, so that's the reason the price is gravitating towards that direction. So we're going to see and wait. For now it looks like it wants to continue go lower. So what we can do about it, on the 4-hourly time frames, the trend looking good, and so I was looking at earlier for about half an hour ago, and I wanted to see the price coming up, but it did not really do that. So now it's making its way down. So either way, it still has a chance to. So now it's sitting at 96.48. If it comes down 48.58, that will be the potential. So it went already a bit too far, so I think it's not going to come up this far to these highs here. So I think the next one would be up to these these highs in here at 96.58, around 96.58 zone. I still do want to see a close of this candle before I commit to get onto the short side on this one. So I do want to see the price coming first closing. So it's going to close in the next 40 minutes. This 1 hourly candle is going to close in the next 40 minutes. So I do want to see the close of this candle first before I get on. If the price on this hour it comes up and closes comes up here, then I would not be interested. So if the candle does that, let me just draw it. It will be easier to understand. So let's say this on this hour before this candle is closed, it comes up somewhere like this, and it closes fairly decently. So that will be probably something like this. Excuse my drawing. I know it's not that good, but hopefully you get my ideas. So if it closes something like this, then I will be waiting for the price to go a bit higher. Possibly this one is another potential resistance. This could act as a resistance. Actually, let me get rid of that. So these, so 16 and 68. So this probably gonna be potential resistance. It might go here, but it's not that far away from each other. It's only 2 or 3 pips away. So if the price comes up here and closes on this hour somewhere up to this here, up to the where the entry is supposed to be, which is at 96.58, then I'll be waiting for this one to come up to these highs here, which is at 96 around 96.68. For it's like 10 pip gaps. So I want to if they close here, then I want the candle to come up a bit higher to these highs here. Then we're gonna use for the stop loss wise, we would be looking at, so this is 68. We'll be looking about, you can even get away with the 10 pips, but probably give it extra room. So we got this daily pivot. This is the one thing I'm worried about. Price when the daily pivot is untested, price does like to gravitate towards the pivots. They generally, a price likes to gravitate towards the pivots, so it might be a problem. So 68, and so you can use the 20 pip stop, and then you'll be giving a nice good enough space for this one. If the price comes up to test this daily pivot, then you should give enough space. However, you can also have a 12 pip stop, which you can easily get away with a 12 pip stop, but if the price comes up to decides to come up and test this daily pivot, you're most likely going to get stopped out. So it's up on your own risk preference. I personally like using the tight stop loss, but then it gives me a greater risk reward rather than have a bigger stop loss and save on that trade. So I'd rather do that, but if you do not want to give that tight stop loss, then you can give it a bit of extra room. So again, we're gonna see the take profit. So we have this. I think if the price comes down, it will want to take out this spike low down here, which is at 90. Actually, it's just too close, so I would not use 20 pip stops, 20 pip stop on that one, because the price is, the risk reward perspective is not that good on this. So you need a tight stop. I would go at the very maximum 12 pip stop on that. So what level we said, like just the analyze. So if it depends how it's gonna go. So it's two potential entries on this one, depending how this candle is gonna turn out. So if it closes something like this, or even if the price decides to go a bit lower, then the entry is going to be somewhere here at 96.58. So if that happens, 96.58, then we would be to, where was the 96.58 with 10. So you're looking about, you want to get off just before that. So it's less than 45, so it's about 40 pips. You're looking for about 40 pip stops, so you want to you can get away with the 15 pips. Again, depends on what risk reward is you want to have. The one thing you need to keep in mind, because if you're a new trader and you like to have, of course everyone likes to make bigger money than smaller, so you might just gravitate towards I want more, but you need to keep that in mind. If you have if your reward is further down, then the price is going to take a longer time to get there, and which is, the longer you're in the market is going to take even a longer, not longer, the longer time you are in the market is going to take a longer time for the price to get to your target, which means it's a higher chance that market's going to turn around and then get you stopped out. So you need to keep that in mind. So when you have the higher risk rewards, gives you lower win rate. But then at the end, if you stick to high risk rewards and not just playing around once or twice, you just keep it high risk reward, and then you concentrate high win rate. So if you keep consistent, so if you consistently stick to the high risk rewards, then it's good at the end. At the end, you're going to be net up if you're consistently making the high risk rewards trades. At the end, it's going to be good, but if you're playing around high risk reward and high win rate, then the result might not be as good as you hoping. So back to the so on this one again, for 58 we were looking 68. So 12 pips, you will be looking 12 to 15 pips on both entries. 12 to 15 pips. No, 12 to 15 pips on the first entry if we're gonna have entry at 96.58, and 12 to 15 pips on that one. And if we're gonna have the entry at 96.68, then you can get away with a 20 pip stop loss. And again, the target's gonna be down to these at 96, about 96.14, 96.14 or 96.15 area, just before about few pips before the price is gonna take out this spike low down here. So I already put the marker just in case the price decides to come up while I'm doing a live streaming. So this was the second, and we're gonna move to the next currency, which is which is euro against Australian dollar. Euro against Aussie. So we got euro against Aussie. This one is having a nice move towards downside. This is a daily time frame, so the price is going down. So we want to position. Now it's coming into this where this gap is. We have this gap which when all this virus news started to unfold, then the price just gapped and just did not even look back and just continued to go higher. Now we see this nice move down. So I think if the price is already looking that it wants to come down and very minimum, let's fill this gap up here. So I do think that the price is going to come down at least very minimum down to fill that gap here, which is a good 200 pips away, which gives us the opportunity to get out more pips out of it. So for now, it's already going down nicely. So we want to see, again, I want to see a bit of a retracement. For now, it's still looking good. Keep that in mind that today, Friday, we have a bank holidays in UK and I think most of the places in Europe. So price might just chop around, and depends if you want to leave the trade on up to the next week already. There could be a potential gaps again, you never know, so you need to keep that in mind before making the decision. So if you're willing to take that risk that if you leave the trade over the weekends, there might be a gaps, so you might suffer a slippage depending how your stop loss is, and depends how far the price is going to go. If you have a good 100 pips before your stop loss, then it should be normally be okay. But if you are about 15 pips away from the stop loss, you probably want to close the trade and not leave it over the weekend, because if it gaps like 100 pips like we've seen in the last few weeks, then you're gonna suffer a slippage, so your stop not gonna work. So keep that in mind when you do that. So let's jump into the analysis. So I'm waiting for this one. I want to see a bit more because we don't have anything up here. I want to see the price too. So we got this first price action. We got up open and closes here. It's about 70 pips away. 70, oh, not 70 pips, so it's 70.14 currently and 72.58, so it's about 40 pips away, so it's not that bad. For this particular currency, they move a lot, so it shouldn't be any problem for this currency to cover that ground. So that will be the first potential entry up here if the price comes up at 172.55. That will be a first potential entry. And let's have a look at if there's any other 72.80. So we got the second potential in here. It's 172.80 zone. So daily pivot is further up, so I'm not interested in that one yet. So for the first for this entry at 172.55 for the entry, I would be looking. So 55, 75. You can get away with 20 pips on that. It's 45, even 15 pips will be fine. Yeah, 15 or 20 pips on this, the first entry. If you get at 172.55, we're looking 15 to 20 pips. And for the second entry, we would be looking, so the entry will be on this one for the second entry at 172.80 up to these highs. And for the stop loss, you need, at the very minimum, you need 20 pips, ideally 25 pips. Yeah, ideally you need about 20 to 25 pips on the second entry. But then again, let's see the targets. So what we have target here, So we got this price kind of stopped in here and stalling here. I do want to see this one to come down and at least to fill that gap. So this down to this one at 69.53. So I don't think that I was gonna do it today. So it's a bit too far. Actually, let's see this one. Okay, let's target this one. This one is more like more closer to so at 170.60. That will be the first. That will be the first target. And if you wanna leave the if you want to take the partial profit off and the run it's further down, potentially down to this low, this daily low at 168, 168.20, 168.10, then you can. But my first target will be up down to this this kind of high here, where the where we have this gap here. So the first target would be at 178, 170.60. So to these highs, so 170.60 will be the first one. And if you want to leave it again, you can leave it to down to this this daily low here. So that will be at 168, 168.10. So we got these two potential. Again, the risk reward is very good. If you use 20 pips, 25 pips or 30 pips, it's very good. It gives you more than 1 to 5 risk reward. So that's pretty decent risk reward. So let's move to the next one. Actually, let me see. Oh, I haven't put the marker yet. Sometimes you do the analysis and you just because we got so many currencies. I got my favorites, which I normally trade, but then if there's nothing going on around the markets, you might just like, okay, I'm gonna look at this and this currency. Maybe then after something happens, you get distracted and you completely forget about that the currency you analyzed, and you were already looking for that particular setup. And then you forget about it, and when you come back and you look at it, it was like, oh damn it, I forget this. And then sometimes it happens that the market played out exactly the way you wanted to play it out, and you just miss out. So that happens as well. It happens to everyone, so there's no need to beat yourself up over it, because I remember when I first started trading, it was like, oh, I miss out on that trade, and I miss out on that trade, and you just get frustrated about it. But once you get into more and more, that you realize that you can't catch every single trade. There's gonna be a plenty of trades you're gonna miss, and there's gonna be plenty you will catch. So there's always an opportunity. Markets 24 hours, 5 days a week, so it's always a next opportunity. So there's no need to beat yourself up about you'll get frustrated that you missed on that trade. That happens. So we got the next currency, or the last one, US dollar against Japanese yen. USDJPY. Where is it? Here. Okay, well, this is too far away. So, right, US dollar against Japanese yen. Let's have a look at the daily time frames. Let's see. So we got this kind of trend line, but it's too far away. Let's. Yeah, we got some bit of a trend line here, but I don't. Let's see. It's a very steep trend line, but still a trend line. So we need another touch here. So that's why it's hand railing this. Let's see. Oops. Let me try it on a 4-hourly time frame. See if it makes any sense on a 4-hourly time frame. Okay, it does. So we're gonna leave it in here on the 4-hourly time frames as well as daily time frames. So we have this. Let's go to the daily time frame. So the price of the reaction on this a monthly pivot, and we also have a several lows and some price action going on across the globe here on the just about the same. So we have multiple price action going on. We have several lows and some highs. Yeah, mainly it's low. So we have this low here, down this low, and we have this monthly pivot. So price of the reaction, and we see that price came up all the way to this horizontal line, which I draw it here. This is the strong resistance. We got a lot of price action here, so it acted as a resistance, and then price did have a good reaction. It's coming down. However, it does not look. It looks more bit tricky on this one. It might. Okay, I'm looking on the kind of longer term view, but let's have a look at on a shorter term view. That's what we are doing, day trading, not swing trade. But then my mind is already going and looking for the every dots to connect together. So as of the short term, we'll be looking more of a downside rather than upside. For now, I want to see a bit more retracement. We got these already tested. Ideally, the price comes up for another test. This one's price is at the moment sitting at 108.35. Let's see how far is it. 35 would be. If the price comes up for another test, for another 20 pips, we'll be looking 20 pips up. We got these highs here, and also we have the daily pivot, which has been already tested. But I want to see the price coming up a bit and then testing this one. We got these highs here as well, this little high 108.47. Actually, we're gonna use this one as an entry, and then I think stop's gonna be 57, 60. Actually, we can get away. So if the stop is at 108.47, so 10 pips we can't, and if we do 62, so we were looking 15 pip stop. 15 pip stop, you can get away with that. Yeah, you can get away with the 15 pip stop. If you want to have a 20, you can do that as well if you like to. I generally do like to leave this stop loss just a bit further up, not on about right at the top. Like I know the people, they put these stops. So for example, in this case, it will be, we want to position this stop above this high, and then I do know that a lot of traders, they put the stop just right about, just maybe like even 1 pip higher than this high, when and the price likes to come out, take out if there are any stops up here, and then just continue going down. So that's why we need to give a bit extra space, because price does like to nick the stops. So if we give just about here, which was about 62, 108, 62 or 63, which is around 15 pips, 15 to 20 pips would be the very max. So let's have a look at the target wise. What we have it is the target. Let's go to the 4-hourly time frames. So we have this weekly pivot, actually is untested. Okay, so that could be potential targets, but because, so if we go at 47 and we ride it at 108.02, we would be looking 40. Yeah, we were looking about 40 pip profits, which if you use the 20 pips stop loss with, it still gives you 1 to 2 risk reward, which is good. As I mentioned before, 1 to 2 risk reward is good, but I think I'm gonna do a 15 pip stop, or just even risk it to position my my stop loss just above this one, which I contradict what I just said, but it works out on a risk reward perspective, depending, or the one thing I mentioned is depending how the price going to come up. So I don't want to see anything strong, like for example this candle here, this the white candle here, which is a bullish candle. I don't want to see that one in here. So if we see, for instance, on the next hour the price makes this kind of candles, so if it comes up something like this, then I would not be interested to taking this trade. So again, I watch to the candles because candles give it gives a lot of feedback. So how what the price is doing and what the buyers and sellers are doing. So I want to see not much of a price strength coming in. So ideally, it's one to in the next 2 hours for to come up to these highs, either next hour and next 2 hours. So this next 2 hours is gonna decide if you're gonna take that we're gonna take this trade or not. So we'll be looking here, and I don't want to see anything which shows too much strength towards bullish side. So I want to see something like we got this last three candles, something like this. I want to see something like this candles, which doesn't really demonstrate much strength. And then I will be shorting it in here. Stop's gonna be, depending if you're gonna use 20 pip stop, then ideally place it here. So my stop's gonna be probably below, just around here. So I'll be taking about 12 pip stop or maybe 15 pip stop if I see the potential to hold it. Or sometimes what I do as well, if I need to do a bit more analysis on that one, if I see the potential for the so the first target we're gonna this is gonna be this weekly pivot. Because of the risk reward is 1 to 2, so either two things you're gonna do. You either reduce your stop loss, so if you have 20 pips and it does not give you your risk reward you want, then you reduce your stop loss, so let's say 15 or 10 pips, and you keep the target the same, or you have the same stop loss, but you're gonna leave the trade on. So for this instance, the second one might be just down. Let's see what we have. Some price. So the second target will be at 107, around 107.40. We've got some price action going on, and also there's a weekly S1. But because it's Friday today, and the market's going to close today, I do want to. Depends how far it's going to go. If it gives me a good enough distance between the stop loss, then I would be willing to leave it over the weekend. Otherwise, if it's only like 10 or 15 pips away, then I will not. I will just close it, even if I'm on the negative. If the equity is running negative, then I will still close it. It's better to take a small loss than leave it, and then when the market's open, you just go and see it was like a much bigger loss. So it's always good to take a small loss. There's nothing wrong with taking your managed loss. We all have one. No one has a 100% win rate. That does not happen. Even one of the big corporations who like invest billions of dollars, and they run that very smart programs. There's people running the mathematicians and all that highly intelligent people who kind of control that programs, which are very highly intelligent. Even they have they go to that losing trades. So it does not happen that 100%. No one gets the 100%. So if I've seen on social media that a lot of people are talking about 100% win rate, which is like, it's just really stupid. No one gets 100%. Like, I don't care who you are, no one gets the 100% win rate. There's gonna be always that you're gonna have losing trades. You can limit it, but you're still gonna get a losing trades. It does not happen that you come in, you're so smart, and whatever you have that, whatever strategy you're using, it does not matter. You're still gonna have a losing trades. So when people say that, oh, I have this 100% win rate strategy, I've seen it, I laugh, because for me it's just like nonsense, because I see it clearly. And when they're trying to sell it, I come across with a few of them on YouTube. They say, oh, this 100% win rate strategy, and then I do comment and laugh at them, because it's just nonsense. They are targeting the new traders who do not know, and they think that that could be the choice, which is, I think, is really bad to just sell something to someone who may be in need of money, and you're selling this whatever a program or strategy you selling for like $50 or $100, and then you just giving that software, you know it's bad and you know it's not giving 100%, and you give it to someone who are just wasting their money. And it's not only that they're just paying you that $100 or whatever the money you charge for that. It's also because they're gonna put extra money to the account or the brokerage they sign up, and they're gonna also lose that money eventually, because as a new traders they do not know what they're doing. That's why they got that strategy which you said that you're gonna give 100%, which is definitely not true. So you know that they lose that money because paying you, and also they're gonna lose that money because they're gonna fund the brokerage account, because otherwise you can't make money unless you just playing on a demo account, but which is on a practice. And then they're gonna lose whatever they're gonna invest in that brokerage account. So they're just losing like twice. And if they invest, I've heard many stories, and also some of the people I know, they invested big amount of money. I'm talking about in thousands, and they lost that money, which is not good. And think before you are getting into someone or believe to someone who promises something which sounds too good to be true. And 100% win rate is definitely not right. It just does not happen. And also now they go be smart as well. They say 95%, so they give that 5% kind of margin that, yeah, you're gonna lose that 5%, but it's not that much, because if you think of this 5% loss and 95% gain is like no brainer, right? So you're in profit in 90% of the time. But the problem with that one, when you have a 95% win rate, is that your risk reward is very bad. So you can't have a high risk reward and high win rate. So if your win rate is very high, let's say something like 95%, your risk reward is very bad. So, and over the long period of time, you rather have a high risk reward rather than high win rate. Of course, your win rate plays the role. It has to be, it can't be like 2% win rate, then it's going to be pretty bad. I don't think you can actually achieve the 2% win rate unless you just completely just throwing the trades, you have no idea. But if you have, even as I said, mentioned it, I think it was yesterday, that if you have even 30% win rate with a high risk reward strategy, with a 30%, you still can make money. So just because the strategy has the high win rate does not mean that you're gonna be making a lot of money. They're just nonsense. They use it, the market has used that way, because when you say 95% win rates, it sounds better for you rather than if I say, oh, it gives you 50% win rate. So you think like, okay, I'm gonna only win 50% of the time, and there's the 50% of the times I'm gonna lose. So it doesn't sound as good, rather than you're gonna be winning 95% of the time. It sounds better, it's more appealing. So that's why they are very good at marketing this stuff, and then they just praying for that new traders who are just getting into the trading, and they do not know much about trading. So they just, it's very easy to believe it, and because they're good at marketing this stuff, they just yeah, they just get them that easily. So yeah, you need to think before, if it sounds too good to be true, then it's probably, and most of the times it is. Trading takes time. You need to invest into trading. It's not just you buy that strategy and you're done, you're sorted for life. It does not happen that way. Or even if you buy some magic software or trading bots, whatever they call it, it's still not. Generally they do underperform as well. And if it's something which is not yours, if you bought it from someone else, that trading robot, then when it goes to that losing streak, when you have like 1, 2, 3, 4, 5, 6 losing trades, then your confidence is gonna just collapse. So you're gonna start thinking, that's why the trading psychology comes in a lot. You have to have a confidence in yourself, and when it's someone else's and you just bought it from someone else, and you're not sure about that, and you're going to like have that 6-7 losing trades, you're already starting panicking, like, okay, I'm down to whatever the percentage you were down, and then you're already starting for looking for a new strategy or a new software. That's why when the new trades start, they just test 1, 2, 3, and just moving to strategy by strategy, and eventually blow up your account, and then you just give up. That's why that's the reason it has like such a high fail rate. 90% of the traders lose money, so that's why it's so you need to be careful, especially nowadays with the social media and everyone trying to be the market gurus and selling all these 95% win rate strategies. So do your research. And yeah, so I think I did cover all the USD Japanese yen. What I wanted to say, it's going a bit too long now again. How long is it? Oh, 15 minutes again. I did want to make it to half an hour, but as we can see, I did not manage that. So okay guys, I'm gonna be signing out shortly. This was daily forex analysis for 10th of April. I covered these 4 currencies. I don't see any questions. I do want to mention, if you're new to this channel, I'm making daily forex analysis, live daily forex analysis, Monday to Friday, 8 a.m. UK time. I'm also making weekly forex analysis, which gonna be out tomorrow as well, for the swing trading, if there's a longer term trading opportunities for the following week. So I'm gonna do that every Saturday, and I do upload on Sundays. So I upload every day, so make sure to subscribe to my channel. Also give it a thumbs up if you like this video, and I will see you guys in my next video. And it takes time again to sign out from this one, so see you guys later.